What's up, guys? It's Rob here, and today we're going to be talking about what's going on in the stock market over the course of the next month and why tomorrow could potentially be a very red day for stocks if things go how people are expecting, as well as why in a month from now we might be seeing some much better news for stocks come the following CPI report. So first things first, we're going to take a look at the S&P and just notice that we are actually sitting at a midpoint around here. We're not at the lows, we're certainly not at the highs, but we aren't in a perpetual free fall right now. We've actually stagnated around the 380 level and are fortunately using that as a bit of support over the past couple of weeks. We haven't been falling through $380 on the SPY. So fortunately, we're not just in free fall as the CPI report comes out. That's never good, especially when the CPI report is going to look how a lot of analysts are expecting. Now, the CPI numbers are coming out tomorrow, Wednesday, July 13th, around 8:30 a.m. Eastern Standard Time. And it's notable that we're expecting inflation to increase, right? We're expecting the current inflation rate, which is sitting around 8.6%, to go to 8.8% year over year. And the month over month numbers for June, we're expecting to be 1.1%. Now, there are a couple of reasons why we're expecting this, but it's notable that it's not necessarily the best thing to see inflation continue to ramp up. A lot of people have been hoping that inflation would be stopping, topping out, and actually decelerating, and that would allow the Fed to stop being so hawkish with their monetary policy and to not need to raise rates as much as they otherwise might. But it's looking like that's not going to be the case, at least according to analysts' forecasts. They're forecasting these numbers. We don't actually know until tomorrow what the actual numbers will be, but these forecasts could very well be in line with reality, because we are looking at a situation where gasoline prices have actually been the main leading factor leading to higher inflation over the past couple of months, ever since we've seen the conflict in Russia and Ukraine and the sanctions being placed on Russian oil companies. We've seen massive increases in the cost of oil, and that has unfortunately translated to a bunch of other sectors of the economy and a bunch of other items that people would like to purchase. Now, you can see that in the month of June, we were unfortunately reaching close to a peak on those oil prices. And fortunately, following for the latter part of the month, we actually saw decreasing prices, and I'm expecting that in a month of July, we'll see much, much better inflation numbers, because we're actually starting to trend downwards very much. We're seeing big deflation regarding oil in terms of June to July, right? July is it's looking at least like it's going to be much, much lower than the June numbers. Now, June was decreasing for most of it. Unfortunately, it was still on average higher than the month of May, so we're likely to see some inflation in oil, which does tend to drag up the overall inflation, not just for oil prices, but for a bunch of categories. And you can actually see that by category, over the past 12 months, what has been causing the most inflation? Well, gasoline, number one, up 48% year over year. Absolutely monumental increase there. And you can see that a lot of these categories, most of four of the top five categories, are related to the price of oil. You can see gasoline very directly related to oil, up 48%. Airfares, up 37%. Now, that's also related to oil because the fuel that those planes use it's oil-based. So whenever the price of oil goes up, so does airfare. Transportation, that just makes sense. If gasoline is going up, if airfare is going up, transportation is going to go up. Hotel rooms, not too related to oil, but household energy, also related to oil. So a bunch of these categories that are up 19% or more are related to the price of oil going up. Now, you can see there are some other categories like used vehicles, furniture, new vehicles, and food that are actually raising the overall inflation rate, which is right here at 8.6%, that are not as directly related to oil. Some things like food, you could make the argument that, farmers are using oil to both grow and then transport the food. And obviously it does leach into everything. When the cost of transportation goes up, then you can expect the price of everything that needs to be transported to go up, because it needs to make more money to afford the transportation costs. But overall, we are seeing that, a lot of this is driven by oil. And fortunately, we are down oil price-wise about 7% today, down below, again, $100 per barrel. And if we continue this trend, then that could be very, very good for inflation over the next couple of months, and hopefully good for the stock market. I mean, the hope is that the stock market can start to recover as soon as the Fed doesn't need to be as hawkish, as soon as we can get some good news coming out regarding inflation, because currently that is a big worry on everybody's minds. Everybody is worried that inflation is going to ravage the economy, put us into recession, that the Fed is going to have to continue raising interest rates, making it tougher to do business and take out loans and get financing for whatever businesses you're running. and everybody's worried about that. But if we could see inflation starting to wane a little bit, then potentially we could start to put the brakes on some of those rate hikes, and that could actually end up helping the stock market out quite a bit. Now, that's what we've got for you in terms of stock market news over the next couple of days and month. Hopefully, we'll see the inflation numbers not coming in as hot as analysts are expecting, but I wouldn't count against it, right? I'm expecting that since oil, we actually have the data for, we can see that oil has been more expensive. I'm guessing we will see those higher inflation numbers. So if you guys appreciate this video, please consider subscribing to the channel. And other than that, guys, keep in mind, none of this is financial advice. And other than that, have a great rest of your day. I'll see you in the next one. Bye.